Good morning, everyone. Today we will talk about the managerial economics. In this chapter we will discuss about the introduction, meaning, nature, scope of the managerial economics. So it will be the introductory part of managerial economics. The term managerial economics is relatively its often origin and it has been discussed as a separate and special branch of economics, which will be closely or typically known as a business economics. Through there is some difference in conditions of these two terms, that is the business economics and managerial economics. Normally business economics would means economics necessary to be understood for the running any business. However, the managerial economics certainly lies more emphasis on the managerial functions in any business firm. So, managerial economics is the economic theory that is useful for discharging the managerial functions. So, there is a close interrelation between management and economics. Economic analysis is required of various concepts such as demand, profit, cost, investment, all economic activities, and economic applied to the problem of choice or the alternative of a allocation of scarce resources by the firm. So, while the firm taking research decisions regarding investment, production, and whole decisions about the business practices, at that time economics theories are applied for the problem of choice or to apply to the problem of choice, or it will be helps to alternatives, choosing alternatives and allocation of scarce resources by the firm. So managerial economics is a discipline that combine economic theory and managerial practices. So in other language, we can say that the managerial economics is nothing but application of economic theories to the managerial practices. So economic theories like demand analysis, supply analysis, market analysis, profit, investment, and all other activities. These theories are applicable or applied to the managerial practices like decisions regarding investment, decisions regarding production, decisions regarding business practices. So, in short, managerial economics is nothing but the practices which is undergoing through the economic theories. So, the managerial economics helps in covering the gap between problems and logic and the policies of business practices. So, definition of a managerial economics according to Mansfield, managerial economics is concerned with the application of economic concepts and economic analysis to the problems for formulating rational managerial decisions. So, according to Mansfield, managerial economics is concerned about or concerned with the applications of economic concepts and economic analysis, which consist different economic activities which are followed by the management or the managerial practices, and it will be helps to the problems solving solutions for the managerial decisions. According to Sengman, managerial economics is nothing but the integration of economic theories with the business practices for the purpose of facilitating decision making and forward planning by the management. So, Seligman concentrate on or emphasis on the planning by management. According to him, the managerial practices are designed for the forward planning, and according to them, the economic theories which is applicable for the business practices for problem solving of the business practices. And last definition which is given by Brigham and Pabst. According to them, managerial economics is nothing but the application of economic theories and methodology to business administration practices. Now, the nature of managerial economics. Managerial economics is closely related to the microeconomics. As we know, there is a different branches of economics which having the different scope of study or the different subject matter. So microeconomics is the base of uh, economic science, in which we discuss all economic activities in concern with individual things or individual person. So in that we have to discuss demand analysis, supply analysis, market functions, how market take response to the business activities. So in managerial economics, while taking the decisions regarding business practices, we have to study the microeconomic concepts and the macroeconomic theories. So managerial economics is closely related with microeconomics. Managerial economics operate against the backdrop of macroeconomics. So, in case of macroeconomics, we discuss about the economy as a whole or aggregate economic activities. How economic activities are closely related and how they are interconnected. So, in macroeconomics, we discuss about investment, income, employment, national income. All these theories are studied under the macroeconomics. While taking the decisions regarding business practices, regarding investment, regarding production, regarding employment, we have to study the macroeconomics. Next nature is that managerial economics is a normative statement. So, while taking the decisions regarding business practices, managerial authorities or the managerial practices think about ought to be. So, this is an ideal statement which covers or which solves the existing problems of business practices. So, normative statement is nothing but the statement which shows ought to be what should be. So it will be the problem solving statement for the business practices. So managerial economics helps to the business solving practices of a business or firms. Next, prescriptive actions. It means managers which takes decisions regarding managerial practices. At that time he have to consider the management or the business goals, and according to objective or goals he have to take decisions. For that purpose, managerial economics helps to take actions in concern about the goals of the organization. Applied in nature, here we can say, in case of managerial economics, the economic theories which applied for the managerial practices, which is called as the managerial economics. So in that case we can say the economic theories are applied in management practices or business practices. So it is applied in nature. Managerial economics offers scopes to evaluate each alternatives. So in economics there are different concepts which have to be designed for uh, choice regarding resources or alternatives. Likewise, opportunity cost theory, in which we discuss about what opportunity lost by the producer while taking the decision regarding production. Once he take decisions regarding XYZ production, at the same time he lost the opportunities of the production of another product or goods and services. So in case of alternative choices, managerial economic offers the scope to evaluate each alternative and which is the best alternative, we can say. Managerial economics is an interdisciplinary subject. It is closely related with micro and macroeconomics. Also, it is closely related with business economics. So, it is an interdisciplinary subject. and it is based upon the assumption and limitations. Every economic theories or law or concept having the assumption and limitation. So the while the take application of the economic theories, while or we can say when we are going to apply the economic theories, we have to take consider the assumptions and the limitation of that particular theory. If a managers wants to be complete their goals, you have to create the condition according to assumptions and limitations. Thank you. In next lecture we will discuss about the scopes of managerial economics.